The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 10th day of January, and we're looking at the Dow up 63 at 33,581. Kind of back to being, that's a pillar of strength, but that strength can dissipate. Why? Because there is a lot of news that's going to be pertinent to direction and direction to the different indices and different sectors. And today's the day. We saw it yesterday. What I've been saying to subscribers, I want to see the semiconductors and that's the SMH, that's the ETF for semiconductor, the semiconductor sector. And I want to see the QQQ, NDX 100, actually start to come on quite strong here. So maybe the Dow will just lag a little bit. That's okay. Meantime, back at the ranch, what we're looking at is in terms of patterns. We broke out of that rectangle formation on Friday with that huge move up into the over the 33,400, 33,500 resistance line. And we spiked very sharply higher. Yesterday, we actually went to 33,935. That was a spectacular move. It was also spectacular. No, I wouldn't say spectacular. It was a very sharp reversal. Basically, what we've got here is a Chapman wave inverse Roman candle, in other words, upside down right here from yesterday. And it says that within 2 sessions, if for about 60 to 90 minutes, the Dow is able to hold above 33,700, there's a really good chance within 2 days it should test the high of yesterday into the 33,900s. But if there's a close below yesterday's low, and in this particular instance, it is 33,000. And let's go to 33,487. That'll be a big negative, at least in the near term, not even the short term, just the near term. So within that context, today, you're seeing there's a little L right there, and that means that the 9 period, the day is young. We've barely begun. We're not even an hour into the session. The 9 is trying to close above the 14. If it does that, that is a good sign. Together with the MACD turning positive, stochastic still lagging at 64%. And that on-balance volume is very poor. I'm a little concerned. I want to see on-balance. That is the running total of the volume on an up session. That means it could be a 1-minute bar, a monthly bar, it doesn't matter. But an up session of that bar closes higher. You add the total volume to the previous volume. If it's lower, you subtract it, becomes a running total, and you can see going to that high that was made on the 13th of December at 34,712, that on-balance volume went right to the high. That a perfect turnaround session, and that coincided with on-balance volume. The stochastic, that sort of turned around that day, but it was not acting. I mean, you couldn't really use it as an indicator, and the MACD was already deflecting low. So this was just a beautiful signal. Here we haven't got a signal at the bottom. We got not yesterday or the day before, but we did get it. Look, there was an unbalanced volume low on the 19th of December. That wasn't the bottom. It was a bottom. The next bottom was, 10 or 20 points lower, but the unbalanced volume was already rallying, which is another reason why we were looking at the long positions. We've been adding long positions to our core position, both in the Dow and the 3 times long. And we've done that again. We did that yesterday at fabulous profits, got in early on the morning Friday before the open or just at the open and ran all the way up, and we raised the stop. And today we got back in, but this is a more tentative move in the sense that I tightened the stop. I just didn't want to give back very nice percentage gains that we had. All right, let's just go on. S&P at this particular point is trading. It's up 7 at 38.99. That's good, but it did make a lower low, and that means that it needs to get above the body of this candle. In other words, the open yesterday, oops, was that the close? Opened at 39.10, screamed, it certainly did. It screamed to 30, why is it hard to see? 39.50, and then it dropped to 38.90, and it closed at, is that correct? Am I doing that right? Or no, that's the open. Okay, close at the low. So it opened at 39.10. Whoops, is that 39.10? Yes. So today it needs to get above that, close above that 39.10 to say, nice move. Otherwise, it's a little bit of a problem. I don't want to take too much time here because it's easy to see. We need this rally to continue. It can't just be a one-off. We've seen that every time we've had these big spikes to the upside. Within a day, you get this very sharp turnaround. No, you want to see a follow-through to the upside, and you are getting that in the QQQ. Now it's up almost $1 at 271.50s. That's what I want to see. I want to see this acting very well. This is a little different to the Chapman Roman candle, but I'd say at any point in the day, if it trades for about 35 to 45 minutes above 272.81, let's go to 272.85. My suggestion would be that in the next 2 days, we should see a test of the high that was made yesterday, which is at 275.29. And I'm only talking near term here in the markets. Why? Because the weekly charts have a lot of work to do. All right. I wanted to just give you this quickly. I don't know what's being said by Chairman Powell, but you can see I typed in here at peak C1, C2 in the 10-minute chart. The MACD stochastic, I wanted to mention this to subscribers this morning, and I thought, no, I don't want to have two newsletters, a newsletter with futures and a newsletter with everything else. I just want to be just focused as I can. But my thinking was there was just a chance that we had a two-session day today, a two-click session today. What does that mean? It means that you could base it on the 1-minute chart, but if you go to the 10-minute chart, and for those people who did my all their webinar, this is what you're looking for. Yeah, asked about it, and I said I would show it whenever it appears. Look, when this class positive with the MACD turning up sharply, the stochastic and the 10-minute E-mini chart, stochastic running together, this is like a Chapman wave squash. It says you should go very quickly to peak A, peak B, peak C, and then maybe rest a little bit as the torque from the stochastic and the on-balance volume hands it over to the MACD, and that moving average convergence divergence takes it over, and that's where you should see your D, and that's where you get a test of how does it hold. So there is a chance that you've got yourself a two-click session here based just on this one indicator alone. I always say don't stick with one indicator, but if ever there was one and I was on a desert island with a little bit of internet and my computer, I would say that the 914 crossover is absolutely imperative to what I look at for sustainability of anything that you are holding. So this is a very nice move. This is now gone to leg C in the 1-minute chart and leg D in the 10-minute chart. Okay, so this is very important. That's the reason why I said again today, let's get back into the UDOW. We took profits. We want to get back in, and we've got some positions that we're trying to get into. One we have that have the potential not to be near-term buys, but more buy and hold for more to the short-term to intermediate term. And then we'll see. I don't know if it's going to work out, but that's what we're trying for. This is a change in modus operandi for us. Dow's up 118. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
About Five Below. I'll just do that right now. I want to get your questions as quickly as possible. Let's just go here. That's his E, F. No, what did I do? This is A. That's it, A. I'm just doing this right now live with the Chapman wave notations. I haven't got the up arrows or the down arrows. I'll put them in a moment. Yeah, so this is really important because this is telling us Five Below is a specialty discount. They have specialty discount stores, not stores. Let me just change that quickly. I had to type that in during the break. And I did, during the break, I did the notation. Weekly made a peak C up in the 240s. Plumps down to the 120s, and now it's rallying. It's at 188. This is a brand new. So this is a gray peak A, a gray peak A, gray peak, a leg B right now as we speak. But that peak C, if at any point, let's just say this rallies to a peak B and then pulls back and then it goes to a C, but everything's underneath the high that was made in Five Below back in August of 2021. At 237.86. Now, if we look at this and there's a pullback and then it goes to a C and then all of a sudden after peak C, there's a huge move to the upside and it takes out the left side peak C, that starts a new leg D, but then it takes out the old peak C at 237.87. It goes 1 penny above the high. That gives you an overlapping peak D, a leg D, and that should go quite a bit higher. And that makes that whole support, it means it'll come back and retest the left side high. So that's looking out. Meantime, back at the ranch, we've got the daily making this cup formation, a little jagged, but it's a cup formation, going from one level, had a gap up, full the chunk of the gap, and then broke out. And now the big question is, how high? Today's high is 189.50. It's trading at 107.88. But the high at peak D back at the beginning of December, that was December the 1st, was 188.67. So we've gone just slightly above that. So this is a down arrow. Let me just, he has a down arrow, he has a down arrow, he has a, these are all peak Ds. Everyone made a four higher peaks. This made a peak D, pull back, and then made a quick E just under the 200 period exponential moving average, and then plopped So let me just put that in here. So there you get, that's an up arrow, that doji candle low. This is a double bottom. That's the low right there. And this one is the low right on the 200 period moving average. Yes. So you see the reason why I'm making a big deal about this cup formation. Now, what I normally do, I didn't have time because I had done the 5 below ages, and I've done so many charts and I've lost, they are there somewhere. But every once in a while when my, through whatever it is, if the computer shuts down and I haven't been able to save at that moment, the last moment, it comes back, and it comes back with all my notations, but from a different series. I've never, in 20 years, I've not been able to understand it. And TradeStation hasn't been able to figure it out for me. So I have to renotate a whole bunch of charts. I lose some, others stay. Doesn't matter. It took me just a moment. Here he is, full notation. Here's your Chapman wave. Look right here. Here's your plumb line right there to the low. Whoops, let me just there you are. On 5 below. And the question is, how high does it go above this left side peak D that was made on the 1st of December of 188.67? I'm going to type that in, 188.67. And this is important to me. Why? Because look what we just did. We saw in the E-mini a peak C and then a peak D, and it had the same pattern, not quite the same pattern, but very close to the same pattern. And the same thing happened in the 10-minute chart. But look at this. Look at the cup formation. It had a peak E way back here at about 9:35 this morning at about 39.27. Pull back sharply, had a big spike up to peak A and peak B. Whoops. Peak A at E-mini 39.24.75. Ooh. 39.25. Yeah, I thought it was a quarter point high. It was. So that's peak A, gray peak A, gray peak B, pulls back, and then it has underneath it, whoops. I always have to count. Once this is the starting point right here, you've got to, that's the starting point. So every peak above it gets counted. So this peak gets counted right there. As I was doing my show, so I really couldn't do very much in the speed that's needed. There's your D. So this is actually D right here, and it's just gone to an E. Now, the reason why I'm making a big deal about this is that if it goes above the left side high in this cup formation, and there's a much deeper cup formation right here, longer, I should say, stretched out, went all the way to there, how it handles any retracement is absolutely imperative to monitor. So look at the pattern, cup formation, almost a left side, right side price time match, breaks above, closes above it. Now, I usually say 2 out of 3, maybe 3 out of 4 bars above that, makes it really important. It says that you could pull back, but you're probably going to try to come back to that level there. That would be the 27.25 level. Well, we're under it, and the 9's just crossed down, so I have to put a down arrow there. Now, why am I making a big deal? Hey, look at this chart right here. Cup formation, got a restart here. Is this a brand new buy signal to buy mode? It is, but that left side high is going to be imperative to monitor. So this has already gone to a leg C. It could be an alternate count CE/C, because that D is still in place since you didn't come all the way back to the starting point over there where you started your buy signal to buy mode. So this says it's really important that 5 below, FIVE, trading at up 1 at 187.84, climbs above the 188.67 high of December the 1st, holds there for 2 out of 3 sessions. I prefer 3 out of 4. And that at least says that you could pull back to make a cup and a handle pattern. But the higher you go from here, the further away you go from the 188s, the better it is. And that means you've got to be monitoring the daily chart and the weekly chart. So I love this chart pattern. I love the fact that in this particular time frame, this particular modus operandi of certain sectors holding very well as other sectors are still tanking, this says that 5 below is in the area that says it is a focal point for fund managers, and it's holding very well. I like it. So within that context, the question is just the analysis of it, not whether to buy or hold. is I like it very much. It's in the area of what is doing well since the certainly this is the July low, but actually since the October low, this is just pushing higher, and it tells you that the specialty discount store in this case is in fact, I would say, in favor. Now, what I would do is I'd go to the left side over here. We've already gone above it. So I'm going to make this a very wide, look at this, very wide. And I like to go all the way to the Grand Canyon back wall cliff. So I'm going to go all the way to there. I should go to that previous high. In fact, I'm going to go to that high. And I'm going to talk about the way I look at patterns like this when we get back. So this is 5 below. I'm working on it right now. Dow's up 89, S&P's up 11, Basil Chapter, Tiger Technicians Hour. 5 below, and we'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back with 5. So basically what we're looking at, 5 is trading down 36 cents to 186.47, made a high of 189.50 above the previous high. So that's peaks, leg C. I always like to put in the story so that I know what to be aware of. So I'll put the alternate count here, E/C, saying my preference right now is to think of it as a C. The MACD just crossed positive. The 9's over the 14. The stochastic finally got to 80%. On-balance volume isn't overbought yet. It's getting there, but it's not there yet. Look at that perfect turnaround right there. Let me just give you this. You'll see by my arrow right here. You see that line right there? That corresponds exactly to the 1st of December high. Then a pull back. This corresponds exactly to the low. You can't use one indicator. You need others. It's a day late, a day early for the turnaround there, but still pretty close. So that's on balance volume. So I like this, but it needs to do work. If you want to get in right now, I say it's a little riskier because I've got a more conservative Chapman Wave inside wedge target repellent line, and that is right there. And that says it can get to 197. Oh, it's this week. 195 this week, 196 next week. And that would be the resistance. So I like it very much. But to buy right now, I'd say if you were to buy, you can only start a very small position. Okay? Why? Because you're right at resistance. And it hasn't yet, today, if it was holding right now up close to the 189.50 high, I would say, wow, I like that action very much. But in this particular instance, it says, I'm ready maybe to stall a little bit. But yes, this is in favor. It's acting very well. All right, that's 5 below. Next question was, remember, I did this. We had a caller, I think it was last week. Was it Monday? Today's Tuesday. I think it was last week. Last week sometime. A caller from Boston who was looking at Amazon, starting a series of steps to get in. It bought 25, and we've been talking about that, and I said at a certain point, yes, in this particular instance, I would say it's good. And if you're in for the longer term, you've got to widen the stop. I think it was in at 84. The low that was made right here was, what was the low? 86.40. So so in at 84, the low was 80. Did I say 80? 81.43 was the low. So the 5 points up, and I'd say to him, just because it's a starter position, I'm even prepared to widen the stop a little bit. I don't want to see a couple of closes underneath that left side low that was made round about the December the 28th at 81.69. And now Amazon is showing a little bit of strength. It's at 88, acting very nicely. So as a looking out starter position to be building a series of buys, I said I would still only go into the one position and wait a while, because if it comes back and takes out the lows, then that's not good. But if it starts to build very slowly, slightly higher highs and higher lows, maybe we can look at it a little differently. But it is in this whole unsweet spot right now where, based on inflation, based on sales, based on the RTH, this is the retail sector, this is the Van Eck retail ETF, 20% is Amazon, which is starting to rally above the rising trend line support in the weekly chart. So far, that's good. But if you look at the XRT, where it's equal weighted, it's a slightly different picture, not the same picture with rising lows. This is a little different. So that's just telling me retail is still really tough. All right. With that said, a couple of things that I need to go to. Question about FCX. Well, a couple of questions came in late yesterday. So FCX is trading beautifully. It's at 43.61, up 78 cents. Leg E in the weekly chart. Now, remember, what do? I look at a pattern and I say the last major left side high before it broke down is going to be my large rectangle border. So here it is. And then it's going to probably make a lopsided cup formation. I'll call it the gravy cup formation, because it comes either the left side goes sharply low and then flattens out and then takes a long time to make higher highs and higher lows, or it goes a long time to make a low and then a quick one. We just saw that in, what was it we were looking at on the E-mini. We makes a very quick rally back to the previous high. Now what I'm looking at here is within the context of the lopsided cup formation. Look at that. Now, I'm not going to do a left side, right side price time match for that. I'm just going to say the deepness, the steepness of the PC monthly chart going from the high in just over 50, 51, 52, somewhere around there, and then pulling back to 25, getting cut in half, and now rallying to 43, which means it's over a 50%. It's getting to the 66% retracement. I like this very much. And the question came in, let me see, Basil, FCCO, isn't this stock screaming, follow me all is well, up ahead? So this is one of the major copper stocks. It says Freeport-McMoRan, Inc., copper. It has other metals, but I mean mostly it's copper. And yeah, this is saying that, and that's the reason why for subscribers, we're looking at some of the deep cyclicals and saying, I don't know what it is, I don't know why it is, but some things are actually working quite nicely, not the way you would think it would work. So this is a leg F. It could be an alternate count, F/B in the weekly chart, a brand new gray leg B in the monthly chart, meaning it's gray because it's underneath the previous high of peak C, and none of the technicals are confirmed. But the daily chart, look at the stochastic flat at 87%, on-balance volume is a little overbought. The MACD is good, 9 is over the 14. So I have to say this is a gray A right here, and a blue, gray meaning it hasn't confirmed a buy mode, a signal or buy mode yet. But this is an E/B, another one of those E/Bs. And why do I say alternate count? Oh, that means E, you've got to be careful. B means buy every dip. No, it says in the notation that you've got 9 over the 14, MACD is good, stochastic is good. Everything about it looks like a B, but just because we're only now above that peak D, that could be support in the 41s. It's at 43.66. I want to be a little careful. I would not think of shorting it. I would think of more, do I want to be buying? Even though I'm calling this an F in the weekly chart, but I do have to do the alternate count. The alternate count says there's a possibility, don't ignore it, that this is the start of a move to the upside. So the question came in, looking at high-grade copper, type the right thing, and there we go. Looking at high-grade copper, HG, isn't this telling us about the economy, that things are not as bad as being made out? And my answer is, yes, it is telling us that things are improving. That's what all I can say right now is that it's improving. I am going to call this, I'm going to be a little bit more aggressive here and call this an E. I'll have to see if it becomes an E/A in the daily. The weekly chart has already gone to a C. Look, A, a little gray A because it's under the previous peak D. Gray B, gray beard, right there. And this becomes E/C. All right, so I'm notating it, and I don't have to do anything. All the technicals are good. I'm saying I think it's a C. I just want to be prepared in case it could pull back here because it's an alternate count. So if high-grade copper is doing so well, if we're looking at SCCO, which is southern copper, breaking out really nicely. Look at this, E/C. Wow, everything about this says that's a C, not an E. This is really good. And a D in the weekly chart, these are good signs. All I can say is this is the most confusing thing for people who do traditional analysis.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so remember we were looking at the 1 minute chart, which made a peak E, and I put the down arrow in. I said it should retest, and it did. Look, it went there, and then it retested the left side high. That's what I said you can expect. That's for the chance of a dreaded H pattern, lowercase h. Broke down, went to a trough C1, C2, double bottom, tried to rally, couldn't do much. The pink 9-period moving average is still very negative. And we got to a leg D, the C1, C2 in the Chapman wave methodology says sometimes if the technicals are still strong, you can get something that looked like a D, but it didn't get to the D. It just missed it, and the technicals are pulling back. But some of the technicals, in this case, the 9 EMA is still strong enough to see one quick bounce to finally get you to the D. It gets you to the D. And now what we're looking at is there's a down arrow in a sell mode in the 10-minute chart, and we'll see where that takes us. If you look at the Chapman wave inside wedge target support line, that's got 38.97, I believe it is. I'll tell you right now, 38. Yeah, 38.97 to 3900 as the support level to watch. All right, this is all the techniques that we like to use. I said I will start showing them more and more during the day. Yes, and the question came in, what was that S? Why is it an S in Freeport-McMoran in the daily chart? Well, it went, look, the 9 went, it was positive, then it went negative just for 2 bars, S, then it went long for 1 bar, short for 2 bars, 3 bars, 4 bars, and the 5th bar went long, and now it's green. So that's what I always tell you, that you can't just use one indicator. You've got to use an amalgam of different things, because here you would have been, the gains that you would have made over here, you would have lost quite a little, because you would have got in on that bar, that pop-up bar, the very next bar, then you would have had to get out at the low of the bar, then you would have got back in, and then you would have got out, and then you would have got back in. So that would have added up to taking away quite a bit of the profit. So sideways is detrimental to trading the 9-14 crossover. Big moves up, like I said before, there's a chance, there was a chance, but I didn't want to talk about it because there are just too many nuances with Powell speaking, etc., that wasn't a possible two-click session. Well, we finally got to D. D in the 10-minute chart said you've got to exit. And here we are at 3,900. Going to be watching that closely. So let's go back to our story questions that have come in. What's the time? Yep, we've got time. So I said that I would keep looking at this because it's so important. ExxonMobil. So ExxonMobil popped to a leg E 3 days ago, then a peak E yesterday, did not participate in the rally. It was pulling back. And I claimed for some time that from my perspective, I'm looking at ExxonMobil as being in a trading range. It's in a rectangular type trading range. I can now put that back. I took it away because it was just so messy. But the high, the Chapman wave 2-bar reversal back when it was in the 100 and was it 114? So we're looking at all those moves in the 114s. Says there's a good chance that there's a big digestive phase going on with ExxonMobil. And I said, I would not consider it a short, and this is like a near-term intraday or something. I would consider it waiting for a new buy signal if it can hold steady for a little while longer. Just to take time. Time is as important as price in my work. In fact, it's a sideways action. You got the rectangle, look, this started off as a wide rectangle formation in the weekly chart. It's going to turn in probably into a narrow one if it continues like this for a couple of more weeks without breaking out. And then I'm going to say, okay, if there's a pop towards the 114 and then it fails and takes that halfway of the rectangle formation as support, it could go all the way back down and even take out the left side low. But we haven't got there yet. Meantime, that's what I'm looking at. XLE, another question came in. XLE, no. Oh, I don't know why it does that. It did it to me the other day. Oh, so the left side, it hit the wrong thing. Okay, let me see if I can get this organized. I'm going to go here. Please come up. See what happened? I lost all my price. And the reason is, and it did something on the left side, 150%. This is not what I'm looking for. No, get out of that. Let me just see if this has done something. Oh, I'm messing it up. Okay. So what do we got? We've got about another 12 or so minutes to go. That's fine. I'm going to get out of this. I'm not going to mess around with this at all. I'm going to come back to it. I'm going to grab this one at the back, which has no notation. Used to have, but I took it away for exactly the same reason, I think. All right, so that's ExxonMobil. You won't see the notations on the left side. They're not there. I have to figure it out and shut down maybe, and that means I lose all that info, all the notations that I just did this morning. I lose, so I have to figure it out. I'll take a little time a little later today. Got to get ready. Got an interview with Tom later on today. I want that all fixed up. Gosh, that's so upsetting. It's the mouse. It's just a little too quick, and it hits things that I don't see. Also, of course, once you get over 50, I'd say over 60, technology just goes where all the time, just to really check you out. So I want to look at that. I'm going to also do this. Yeah, Duffy, I agree. So, the question came in. Let me see if I can do that. Oh, I haven't got the notation of the chart. Where was it? Could I look at, which one were you looking at? Question came in. I'll find it in a moment. Oh, there it is. If you have time, thinking of hedging BTAI. Well, I won't have the daily notation, so let me just do this. I don't want to do anything here other than, look at that. BTAI trading at 22.85. This is BioXcel Therapeutics. Nice leg B in the monthly chart. This is a 1-to-1 expansion. In the weekly, it's gone even higher than that at peak A. This is an A, that's a B, this is a C, this is a D. It's in leg E. Wow, I like it very much. So, so you want to hedge. I actually don't even know how I would hedge this because I don't see anything on the downside yet other than a pullback. So I don't know what to say. I like it very much. It's at 22.84. It's walking the 14. Look at it. It touches the 14 and walks the 9-period moving average. The MACD did pull back. It means that at some point it is going to pull back. But the 9's so high above the 14, I'd have to think about that. And the stochastic flat at 88%. I don't know. I understand. I know exactly this is the way you work, and it's worked beautifully for you. I just don't know what I would do. Maybe. No, I'll have to think about that. Maybe just email me your options, and then I will have your options. That's a good one, right? Your choices, and then I'll decide which one looks preferable to me at this particular point. I love the fact that BioXcel Therapeutics trading up 40 cents today, 22.84, is doing so well. All I can say is that the support is between 20.50 and about 19.70. So that's really what I'd be looking at. And yes, it is making slightly higher highs, but it is making higher highs. I don't know. I like it. I'll be back in a moment. Dow's only down 27 now. We'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, final segment, Dow's at 23, and this is what I've been looking at. So did I mention, I know I spoke about it here, and I said very often peak C1, C2, because the technicals are still strong, gets you to that D, and then you got to be careful. Well, it's the same thing on the downside. Look, trough C1, C2, exact same levels, didn't make a lower low. It tried to rally, the technicals were still weak, and boom, it went to a leg D with a doji candle turnaround. And now it's crossed positive, and this is a 1-minute chart. Don't trade your monthly chart on this. This is a 1-minute chart. And it says, look, stochastic, this is almost like a Chapman wave squash where the stochastic ran quickly over 80%, 90%. The MACD continue expanding. The 9 is over the 14. And that says if it doesn't very quickly go to peak A, peak B, and then C, then it's stalling a little bit. But this should be a Chapman wave squash that gets you to a leg C. Then it sort of stalls after peak C and wait for D, because the torque of the stochastic has to hand it over to the power of the momentum power of the MACD. So if it stalls here, it says, uh-oh, it had technical veracity, but not price continuation. So that's really what I look at. And that just says to me, right now, what we're looking at is, this is not the same kind of negative follow through that we saw after every one of those big spike ups, those 800, 700 point moves, even that 1200 point move once upon, where very quickly you just saw that sharp turnaround and all the bad news came in. I think this is ameliorating, and Eyeball in the Den was absolutely correct. I think that copper is telling us something. It's rotational, but it is telling us that it isn't as bad as being what's made out, but it also isn't as good as the real bulls are thinking. So I'm not trying to be Pollyannish. I'm just saying I'm still looking at the upside here as viable. I just don't want to get overly, we have no shorts right now. I just don't want to be there. My mind says at this particular point, we should be rallying, and we are rallying. Hey, let's keep it at that. I'll be back with Tom O'Brien a little later on. Oh, we're about to start Lexi in the 1 minute chart. Yes, we're getting there. There it is, Lexi. See you later on. Stay tuned for Steve Rhodes and the rest of the programs coming up.